Hi friends, Simit here from informedtrades.com. In this video, I want to take a look at something known as the Hindenburg Omen, a technical indicator designed to forecast market crashes. So let's get started. Okay, and going back here. What is the Omen? Key points, indicator to forecast market crashes. Based on the criteria for how it's calculated is you take the daily number of New York Stock Exchange new 52-week highs as well as the daily number of new 52-week lows, add them up, and if that's equal to or greater than 2.8% of the total stocks listed on the New York Stock Exchange, which is a little over 3,000 I believe at the moment, then you have an indicator for the Hindenburg Omen. At the same time, that's the main criteria. At the same time, you want to see the NYSE index trading above its 50 simple moving day average, and you want to see the McClellan oscillator, a technical indicator, which is on many charting programs and trading platforms. You want to see that being negative on the same day. The fourth and final, the fourth criteria is actually one more, is that the number of new 52-week highs cannot be more than twice the number of the new 52-week lows. So the basic idea is you want to see a lot of new highs, a lot of new lows, preferably more new lows than new highs. You want to see, the NYSE above the 50 SMA, the McClellan oscillator negative on the same day, and you also want to see this signal multiple times within a 30-day period. If you see it just once, that's not really the strongest indicator. The Hindenburg Omen does have a solid track record of forecasting market crashes. Forecast 87, forecast the dot-com, the housing bubble in 2007. It also definitely has issued a lot of false signals. Here's the big one is 87. So this is the kind of strategy where it's a reasonable chance you'll get a lot of false indicators, but the ones that do pay off are have potential to be huge. So that's sort of the trading angle you're coming from. Of course, you can limit the number of false indicators by, again, looking for multiple Hindenburg Omens within a 30-day period. Of course, you want to combine this with other forms of technical analysis. If the market is at a key resistance level, if we see reversal candlestick patterns, reversal price action patterns, oscillator indicators that may be suggesting time for reversal. Coupling that type of analysis with Hindenburg Omens can generally reduce the probability of false indicators. Of course, the basic idea, though, still applies where you're probably going to get a fair number of false indicators, thus the win rate may be a bit lower, but if you understand that you're playing for a market crash, this can be the gains on the winners can be pretty significant. Here's an example of this indicator since 2007 or during the 2006-2007 crash. You'll also have 11% drop, a 14% drop over here that are applied or can be enjoyed or profit from when the signal is issued. That's not a huge drop, so you will get a bunch of those, and depending on how you manage the trade, you could net a profit of 14% here. You could also take a partial profit. You can move to break even. So that's another way of reducing the loss rate that you're going to have with this strategy, where you have some small gains that you'll be able to enjoy. If you're able to move your stop to break even, that can also limit the downside. Of course, like as I mentioned earlier, the real opportunity is in playing for the big gains, playing for the big crashes, like we saw in 1987, 2007, 2001. Those are the signals. And again, when you see just one indicator, one signal within a 30-day period, that's not really that significant. So here we see a whole cluster. Right here we see it here, a whole bunch of times within a 30-day period. Again within a 30. That's when we get the nice move that we're looking for. That's sort of it about Hindenburg Omens. There is the math behind it, where it's a little more complex than indicator. A lot of charting platforms don't really have it. But if you keep an eye out for the news, when it is coming up, when there are a number of Hindenburg Omens that are being signaled within a 30-day period, it'll attract a bunch of attention on the internet. So that's definitely something to pay attention for. Right now, this video is being made August 14th, 2013. We have seen a number of Hindenburg Omens within the past 30 days, so the signal is sort of valid. If you see a technical indicator that justifies a short position for a market crash, this may be something that you're interested in. Any questions, anything you want to add, join us at informedtrades.com. Thanks and best of luck in your trading.